We're going straight to some specific stocks. Let's get into it, in fact. And we're talking to Harry Watt, who's from Shaw and Partners and Market Matters. Harry, good to catch up with you. Now, you've got to focus on the emerging companies portfolio. I'm just wondering what you're looking at right now, bearing in mind, of course, globally we're seeing equity markets come off now. Are you seeing buying opportunities currently?
Yeah, good morning, Andrew. Yeah, it's been an interesting time, particularly in the small cap space in the Australian market. We're just coming off the back of reporting season, which was a bit of a mixed bag across the board there. I mean, if you have a look at the retail space, I guess, heading into reporting, the market was quite bearish retail, and they sort of came out largely better than expected and guided pretty well. One company that we own and have done really well out of recently is Lovisa. They reported really well. And particularly around their commentary is how FY23 started. They've opened up a couple of new stores and trading's been really bullish there. They've sort of hit that out of the park. In terms of the resources space, that was a reasonable reporting period. FY22, basically across the commodity complex, was pretty strong. But guidance there, they're sort of talking to more higher costs coming through across that the resources complex. So that might weigh on their FY23 outlook. And then having a look at the telcos, we own Aussie Broadband in the portfolio at the moment. It didn't really report very well, nor did TPG. Telstra was sort of the only telco that did report well in FY22. Aussie Broadband, their guidance was pretty poor in terms of their EBITDA margins, but we have started to see director buying picking up in the last few days in particular, and that sort of supported the stock. So that's sort of one we like. Yeah. Perhaps they're sort of rebasing expectations heading into FY23, Andrew.
Harry, let's pick some of that apart and go back to retail there. So you're saying, you pointed out Lovisa, but obviously in this environment where rates are rising, we know how this is impacting particularly discretionary spending. So how are you playing that in the retail space?
Yeah, we think Lovisa is sort of the key pick here, and it's rallied really strongly in the last few days. I think given their price point, their consumer isn't quite as leveraged to rising rates and that squeeze on consumer spend as a result. So in terms of how you look at it, I think they shouldn't be as impacted by higher rates going forward. And they're continuing to roll out stores, and their sort of payback period on new stores is really solid. So I guess retail as a whole, it's hard to be overly bullish the space. But a few companies will still sort of do well despite those sort of headwinds.
All right, let's move to resources. In particular, I notice you've got to focus on gold miners at the moment. Are you seeing value there? Because, of course, they've been under tremendous pressure. The gold price, it continues to come off, I guess, as those the US dollar rises along with those bond yields. So what are you liking in that space right now?
Yeah, definitely. Gold's an interesting space at the moment. It's definitely under pressure in terms of that gold price. We once again with the gold names, we are looking at one stock that sort of has its own specific tailwinds, and that's St Barbara. SBM is the ticker there. They've got basically three main operations. They reported okay. They were guiding costs high into FY23, which did weigh on the stock as a result post that report. But having a look at what they've got ahead of themselves, they're looking to offload one of their assets, which will help support their balance sheet. At the Atlantic asset, they've got approvals coming in ahead of schedule as well, so that one looks quite solid. But their key asset is Leonora in WA, and another ASX stocks, Genesis, has been out in the market saying that they are looking to consolidate gold stocks and gold resources in that area, and St Barbara's asset is definitely on their radar. So in terms of gold itself, it's sort of hard to be, once again, overly bullish gold, but St Barbara looks like it's got its own specific tailwinds that should hold it in good stead despite that gold price headwind at the moment.
Yeah, Harry, of course, we've just come out of earnings season, so with those gold miners giving us an update there, beyond St Barbara, are you seeing any other opportunity, particularly with the majors?
Not looking so much at the majors at the moment. We've got Newcrest in our portfolio at the moment, and that's been a sort of a hedge against volatility in the space, and it hasn't really performed as we would have expected. But at one point or another, gold will turn, and that US dollar will turn as well. So having a bit of a gold hedge in the portfolio is a smart thing to do. And yeah, like I said, one point or another, that will turn and sort of turn into a tailwind for these gold stocks.
Well, I guess because you're looking at emerging companies, would you be touching the explorers at this point?
Not so much explorers. I think you got to stay up down the risk curve in the gold space at the moment. In terms of explorers, though, we are looking at lithium stocks at the moment. So we own Pilbara in the portfolio. That's obviously not an explorer, but we are medium and long-term bulls on lithium. That lithium price looks like it is heading higher. We expect demand to sort of increase eightfold out to FY23. So perhaps the lithium stocks is one where you could look at explorers. And global lithium GL1 is one we've got on our radar and one we really like here.
All right, and let's round it out because you were mentioning Aussie Broadband there. It has share price has come off significantly since it reported. So what are you looking at the path ahead for the company? I guess also more broadly with telcos at the moment.
Yeah, so Aussie Broadband, it wasn't a great result, and a lot of that had to do with connection growth sort of slowing and coming in below expectations. And on top of that, they've had a bit of trouble getting their NBN pricing right. They've had their margin squeezed as a result. I know the NBN is in discussions at the moment in terms of changing how they price their products, and that should prove to be a little bit of a benefit for Aussie Broadband moving forward. We have, sort of seen them come out and rebase expectations, which is sort of what they needed to do, and it looks like a cleaning of the slate for Aussie Broadband at the moment. And as a result, like I said, we've seen really significant director buying. We had 6 director buying notifications come through the market yesterday. So if it's bodes well if the management's that positive, despite that weak result. So the outlook should improve from here for Aussie Broadband, and we expect their connections to improve as well. We know they've got a partnership with Origin Energy, and that's out in market, and they're out marketing their sort of telco offering as well through Aussie Broadband, and that should boost their connections going forward.